Hey, it's Jeremy Oxner from Oxner Insurance. Welcome to WCW Blast, Work Comp Wednesday Blast, where our hope is to bring you value and some cost savings to help you with your workers' compensation insurance. So here's 4 things to consider that might save you money, that might help you process. Am I getting value? Because haven't we all heard comp is comp? Comp is comp. Well, actually, there's 2 parts to a workers' compensation policy: the workers' comp part and the employer's liability part. So if comp is comp and price is the only thing that matters, what happens when an employee sues you, the business owner, and your comp carrier is gone from the state? Because the employer liability limits for a disease or an unsafe work environment, when the business owner is sued, those are the limits that typically are going to have a big judgment against. And if the comp carrier doesn't exist, but they were charging such low premiums, as in Nevada and many other states, we have seen carriers leaving the state. Now, a lot of carriers want workers' compensation insurance. Those are typically your standard carriers. But something to consider is, if I'm paying such a low premium for my 5, 15, 25, 50 employees, will that workers' compensation carrier be around if I have an employer liability claim on part 2 of my workers' compensation policy? Because the first part of the workers' comp is state run. The employer is submitting to the state for medical and payments of lost time and wages and so forth, and partial or full disabilities in exchange for that liability side. So consider, if comp is comp, is your carrier going to be around if you have an employer liability claim against you and your business? The second thing to think about is your carrier competitive? There's ways to check. Start by asking your agent. It leads me into the next thing, which is the LCM, or the loss cost multiplier. It's the second factor used in a workers' compensation calculation for your premium. So is your carrier competitive, and what's their LCM? Here's why this is important. We did an audit on a workers' comp policy. We quoted the same policy with the same incumbent carrier. However, the LCM was quite a few points less, which, if the premiums are equal and the LCM was, say, 2 at one carrier, one quote through a national payroll company, and through our quote was 1.5, it's a 0.50% savings. So the trusty calculator says that on a $10,000 premium, that's about $5,000. Check your LCMs. Have your agent check the LCMs to make sure that they're competitive for you. Because if you're paying $10,000 in premium and you can save 0.50 or 0.25, that's a nice chunk of change. Third thing is, what is your scorecard? Typically, if you're over $5,000 in premium on your workers' comp, you get a scorecard. It's called your experience mod, or your experience modification factor. In the NCCI states, they issue those numbers anywhere from 4 to 8 months before the policy renews. And that's one of the other multiplication factors like the LCM used to calculate your premium for your workers' compensation policy. So your scorecard, basically expected losses versus actual losses for your industry. If you're at a 1, that's average. So if your calculation came back at 10,000, multiply it by the mod of 1, it's 10,000. What if you've had claims? What if your scorecard isn't very good? It's a scorecard of the safety of the business. It's not always. I mean, accidents happen. But what if the scorecard is a 1.5? Now, essentially, if 1 is a C or average for your safety scorecard for your business, a 1.5 would be getting down into the grades that we didn't like when we were in school. And you get penalized financially and sometimes contractually because people look at that experience mod, because it is a trailing measure of the safety of the business and how it's being operated. Not to mention a 0.5 on top of 10 grand is $5,000 more because of the claims. So it's always a great idea to do an experience mod audit. Your agent can do that. If you need help doing that, we certainly can help you out at Ochsner Insurance. But those are your 4 things. Is comp really comp? Because if your carrier's not around for an employer liability claim, what are you going to do? Is your carrier competitive? How's the LCM? Is there a way to get into a different LCM? Because they have multiple insurance companies inside of the carrier that have different LCMs based on the types of business that's being written. We already told you it could be some substantial cash. And then the third thing being your scorecard. What does your business's scorecard look like in the form of your experience mod rating? So I hope those are helpful for the WCW Blast. This is volume 1. Thank you so much for watching. Please comment, leave us feedback, and we hope that that brought you value in some ways to save your money. Because money, things, inflation, I'm not going to get political, but things are expensive. So hopefully those will help you in your business. Pay less on your workers' comp, have a safe environment to work for, to send your employees home as good or better than they came to work. And here's to your success.